Representative Wenger, you have really you're a business guy as well, but you have really chartered a path on tech, on making sure that Arizona's laws keep pace with technology. Could you talk a little bit about the law that you sponsored, its journey through the legislative process, please?
Yeah, thank you for hosting this. I mean, the way I approach all these bills, and there's been blockchain, small cell deployment to clear that path, is to get government out of the way in a safe way. But we just get so entrenched in the way that we've always done things that I always want Arizona to have a competitive advantage. So we take these on. The Attorney General's office approached me about doing this, and you said authored. I mean, really, these guys authored it. Legislators always take credit for this stuff, but we don't author anything. But it sounded really exciting. It was more complicated than I thought it was going to be. And then, so you take it through the process. We had lots of amendments, had lots of feedback from businesses. I know lots of businesses were giving input, and we tinkered it. Even at the very end, the reciprocity with the rest of the world came from a business owner, and we threw that in. But it was tough because some people don't like advancement, and they were making it out to be something that it wasn't. They were making it out to be some kind of a payday loan bill and things like that, and it wasn't. And so we sold it. One thing I like a lot about these bills, and especially this one, is you can go through all the motions of saying it's for this, it's for growing new technology, but to me, it also democratizes capital investment and different things, because if somebody's not as well financed, they can't necessarily scale in the year and a half and have the money to get started through those fees and that regulatory structure. And this kind of puts them a little bit more on an even playing field to get it done. So it's exciting, and we're here now, and I'm sure there's going to be enhancements that we can do along the way in the future, and I'm excited to do that.
Yeah, we're looking forward to, I know we've done this in the financial service sector, but we're looking, as we speak, at the insurance industry. Paul, before the breakfast began, we were talking about the different countries that have gone down this path. One of the interesting things you said is, wow, this is the norm internationally. Can you maybe talk a little bit about Arizona's unique role, where this stands internationally, and for the audience, what's the name of the entity you now work for, please?
So, thank you, Glenn, and thanks so much for inviting me to be here. I work at the Bureau of Consumer Financial Protection, which is the statutory name, and it's always a good idea to read the statute in the director's view. So, very supportive of his focus on the statutory obligations to protect consumers, and that's really this concept is broadly shared among regulators around the world. It's, I think, really not that controversial globally. I'm not sure why some people have tried to make it controversial domestically, but a lot of major financial regulators, UK, Hong Kong, Singapore, the Bureau is now part of something called the Global Financial Innovation Network, which is 11 financial regulators that are joining together to try to facilitate these types of programs. The first meeting, I'm actually flying to Hong Kong on Saturday for the first meeting, so looking forward to that. So this idea came again with Glenn at the Envision conference, which I think I see John Reagan in the back, who I think had a lot to do with that, as well as Mara, and there were a lot of folks talking about we want the personnel and we want the capital at the same time, and it's so hard to bring both of these things into a state, and that really dovetailed with consumer protection discussions that Evan and I and others were having, and that we want two sets of incentives to work. We want fraud deterrence, right? We don't want people bringing fraudulent products to market, but that's a negative incentive. That doesn't create better pricing. It doesn't create a better user experience. As regulators, we can't mandate those sorts of things. They have to come into the market. So what's a positive incentive that we can create? And that's where we looked to these sandbox structures that were being used globally and thought, well, maybe we can create these incentives to bring new products, new user experiences, hopefully better pricing to consumers. So we have these twin sets of incentives working for consumers in Arizona, and now hopefully working throughout the country if this sort of model is more widely adopted.
Well, thank you. And Evan, maybe you could talk a little bit about where things stand now in Arizona. I believe there's been some pretty exciting developments over the last several weeks.
Yeah, absolutely. And thank you first. The opportunity to speak on this panel with these two gentlemen is a real honor for me. If you'll indulge me real quickly, I get asked by those who are interested in these kinds of programs, what made the difference for the Arizona bill, taking it from being a bill and getting it all the way through the process. And my first answer is that we had some incredible champions of this idea, not the least of which are sitting next to me. To have Representative Wenninger's credibility with his caucus in the legislature and his ability to champion this idea through the process, that was no minor thing. And then, of course, Paul, who had the vision for how this could work in Arizona, and credit to Attorney General Brnovich for recognizing that this was a way that we could lead and both protect consumers and create the incentives that Paul was talking about. And then, of course, Governor Ducey recognizing the same thing and signing the law. And it's been very exciting. We launched in August, on August 3rd, began accepting applications, and in 2.5 months, we've had 8 applications submitted. 2 weeks ago, we announced our first Sandbox participant, a payment services provider who's going to be performing a test in Tucson at a Wyndham resort. And we are going to be announcing soon a second participant in the coming weeks. So things are moving along very well. We have the applicants are from a wide variety of Fintech industry. We think of the law as primarily useful in the money transmission and consumer lending space with some others that are possible. And the applications, one of the fears not fear, but concern we had was, are we going to get applications for just one kind of product? And thankfully the answer to that has been no. It's been a range of things. So there's a demand for this sort of innovative product. On the regulatory side, businesses seem to want to have a closer relationship with the regulator. They want to be part of bringing new ideas to market and benefiting consumers and the markets where they live.
And the benefiting consumers, I wanted to talk with Paul a little bit about this, because the benefiting consumers part's really a big part. This is really, it's not just the financial company, but it's to really update our laws so that the products that consumers want and that could ultimately be beneficial to them are available. And we were talking a little bit before the panel with Paul. This is sort of a microcosm, in my opinion, as to why the U.S. economy is doing very well, because it's sort of inverted. Instead of just regulating to regulate and to punish businesses and consumers, this administration has really been very bold in modernizing our regulatory structure so that these products that consumers want to get out there. Paul, maybe if you could talk a little bit about just sort of the philosophy, now that you're part of the administration, in terms of the regulatory approach.
Yeah, so I can speak to what our statute and how that's been, the emphasis that's been placed there by Acting Director Mick Mulvaney. And we focused on some, I think, unappreciated objectives of the Dodd-Frank Act. If you look at the Title 10, which sets out the purposes of the Bureau, it repeatedly talks about facilitating consumer access, facilitating innovation, facilitating competition. So this idea that we need these twin incentives is not a new idea, and again, it shouldn't even be a partisan idea. From what I was not in Washington at the time, but I've heard that Dodd-Frank was not passed primarily with Republican votes, and yet this language is all in the statute. So the first program we rolled out was a trial disclosure policy. You can think of that as a disclosure sandbox. Relates primarily to lending disclosures. And the program existed under the Bureau previously, it's just that nobody wanted to use it, and in fact the statute said the program shall be designed to encourage trial disclosures, but nobody had ever done a trial disclosure. So our impression was that we were not fulfilling that aspect of the statute. So we were trying to provide more clarity, trying to streamline the process, and then also making sure that we incorporated good work that states were doing and created incentives for states to continue to do good work. So we have a provision in the proposed policy that says if there's a state sandbox, we want to coordinate. So if you're in the state sandbox, there should be some sort of accelerated process for getting into the program that's run by the Bureau, so we can use our federal system as a strength. I think globally so many people attack it as a weakness, 50 state regulators and so forth. We want to take the aspects of that can be helpful to consumers, helpful to companies that want to serve consumers, and turn those into strengths.
Representative, as we continue to go down the road of modernizing our laws, what are you finding with your colleagues in terms of just the receptiveness and just the best ways we could help communicate to them the importance and the fact that we want to make sure that these things are balanced out, not just from the business side, but from the consumer protection side?
Yeah, I mean, there isn't a hurdle of getting them to know these processes and understand these technologies, no doubt about that. I mean, in my committee this year, we had a blockchain 101 presentation where Sweet Bridge and some other people came and just basically went through it and said, this is what blockchain is, because there's so much confusion around it. But they're coming around and they're asking questions, they're interested, and I think now that we can start showing that this has a financial impact, and it's so there's such a global perspective in the valley of, we need to have people who are educated and create educational programs at ASU and the community colleges to be able to code certain technologies and do different things, and just talk about the financial picture with them and how this is growing, and getting them to understand this is going to be going forward, and if we're at the tip of the spear, we're going to do great for Arizona.
And you mentioned, I do have to break it, you did mention ASU, most innovative university.
Absolutely.
4 years in a row. So if you want second or third, you have to go to MIT or Stanford,
Right.
second-rate schools. But am I correct that there's also something going on with community colleges in terms of training our young people in these areas?
There is. I approached Maricopa Community Colleges earlier this year in February and asked them to start up a blockchain development program where people could go for 5 or 6 months and have a certificate certifying them in basic blockchain development, which I read an article the other day is the average salary is $150,000 to $160,000 now.
Wow.
For that. And I am so impressed because I'm in government, but no offense against government. For government to get something done takes a long time. They had that program stood up in the first class within 5 months, and they had a graduating class. And now I'm looking at taking that idea and applying it more broadly, and we're talking about creating some kind of a grant or some money that different community colleges in concert with the ACA and GPEC of recruiting these companies could apply for, to stand up in a very quick way individual programs, whether it's we have a huge influx of Salesforce development and they need a pipeline of talent, to where we can in a very quick way deploy that money to stand up those kinds of programs.
On the for these to continue to go forward, the consumer protection angle is very important. And Evan, I know that that's something that the Attorney General's office has worked very hard on. Can you maybe talk about some of those components of the law?
Yeah, absolutely. One of the goals in advocating for this idea of the Fintech Sandbox was that we didn't want to weaken or in lowering the barriers to entry exchange that sort of lowering for lower consumer protection. So Attorney General Brnovich, consumer protection is very important to him, and it's a priority of his administration. And I think we successfully did that. In the Fintech Sandbox, participants remain subject to all of our state consumer protection laws. The Sandbox is not a license to do whatever you want. It's if you think about it conceptually, the Sandbox is a helpful analogy, if you will. It has four corners. It has some defined restrictions on market access in exchange for this ability to deploy quickly and have a closer relationship with the regulator who's in charge of oversight. You also might think of it as a runway, if you will. If you have something that maybe doesn't need testing, if it's ready to deploy to market right away, the Sandbox could give you some runway as you build your capacity to manage compliance and understand what you need to do to be fully operational in the Arizona market and elsewhere. And in doing so, our State Consumer Fraud Act still applies. The specific Unfair Practices Acts that might apply to individual businesses, depending on what they are, those things still apply. And in housing the program with the Attorney General's office, I get asked regularly, why the Attorney General's office and not your licensing entity for financial institutions? And the answer was, we thought the Attorney General's office was the best positioned agency as the chief law enforcement agency for consumer protection issues to act quickly and decisively if there was a problem that arose. Hopefully we don't have to do any of that. But if there is a problem, consumers are going to have the best shot of remaining protected, of seeing whatever money that they put into a test, have a chance to have it returned to them. That is going to best be accomplished, we think, through working with the Attorney General's office.
And Paul, now that you're getting a little bit more of a national sense, where were some areas that you think our state and other states should look at? What's next in terms of fintech, in your view?
Well, that's such a challenging question. I've really been doing only two things in my job, and I've kept them pretty simple because that's the sort of thing I can handle. And I've been saying we have two policies that don't work very well. We're working on changing those, and I'm either working on the policies or telling people that we're about to change these policies. So if you haven't thought about using them in the past, please think about using them in the future. We're borrowing concepts from the Arizona model, and I think that's often how it works. From what I've heard from people who've been in politics for a while, is that good ideas are tested out at the state level. So if you guys are able to do something in insurance, I think that would be instructive for other states. It may be instructive for other regulators. So I hope that states like Arizona are continuing to move forward in all sorts of different areas.
So, yeah, Glenn, if I could just jump in real quick, we're very excited about this Global Financial Innovation Network as a concept. Representative Weniger mentioned the reciprocity provision that was added to the law. It's something that we are excited about. Along with our first participant, we announced a memorandum of understanding with the financial regulator in Taiwan. We have an information sharing arrangement with them that allows us to share what we know about companies that might be interested in jumping to the other's jurisdiction. And that, to my mind, is the first step towards doing what the Bureau is working on with this global network. We want the Sandbox in Arizona to, at some point, be more useful to those who are, of course, in Arizona, but also want to go outside of Arizona. And we think it in a lot of ways, it's just a matter of the regulators figuring out how to work together. And so these steps, it's going to be a long process. Even the memorandum of understanding that we have with Taiwan, it's going to take some time and effort on our part to work out, to get to know each other, to understand how the other works. But these kinds of steps are important to us because we think that's the value add, that's going to increase the value of programs like the Sandbox significantly. And it's a priority that we have to explore these arrangements, not just with international jurisdictions, but with the federal government and with other states as these programs begin to become more widespread. And we hope they do become more widespread. That's another exciting aspect of this. We have our Sandbox, which is great. It's going to work, but there's potential in the future to increase their utility.
Well, one of the things, and Paul, I'd be interested in any of your thoughts here. You think about internationally. We're in the process of just recently completed the negotiations for now the U.S., Mexico, Canada agreement. There's some updated language in there on financial services. This could be an interesting area to explore in future trade agreements. I know the administration and Ambassador Lighthizer, we've opened up possible new trade agreements with the UK, for example, Japan. I just wonder if this is sort of an area that could also sort of work its way as the United States looks to expand and modernize its trade agreements across the globe.
That's a very interesting idea, and I actually did not know that. And I just learned something about that trade agreement. I will tell you, it's been a focus of mine, and I think a focus of a lot of people at the Bureau. In fact, I mean, there are a number of really, there are a lot of great folks at the Bureau who've been thinking about these issues very deeply for a long time. So I now, get to go out and speak at the Office of Innovation, but innovation, as you would guess from the statute, has been thought about within the Bureau for a while, and people have relationships with regulators around the world, obviously relationships with other federal agencies as well, and so it's been very valuable for me to be able to benefit from those existing relationships and to continue those conversations. But that's a fascinating idea that you raised that I think is worth some thought.